Hey guys, good morning, good morning. Hope everybody's having a good day today. Like always, my name is Najarro and I live stream every Monday to Friday at 9 o'clock. Just take a look at what's going on in the market. And like always, you guys can feel free to post on the comments and let me know what stocks you guys want me to take a look at. But I hope everybody's having a good day right now. Let's see, let me make sure the stream is working fine. Give me one quick second. So I hope everybody's doing good. Let me just do a quick test. So for some reason, my live stream went off into another one. Give me 1 second, guys. I've been having this issue recently. Let's see. So how's everybody doing? Pop out chat. Did you guys take a listen to C's earnings yet? They were pretty I haven't really looked at them yet. But the stock price hasn't really moved much, it seems. But let's see. Give me one quick second, guys, while I just set everything up. So is there any stock anybody wants me to take a look at? All right, I think I should be good now. So let's pull up the main screen. All right. So today we had some strong earnings. We had Walmart report today, Home Depot. So I have to take a look at how they're doing. We also had Baidu and C Limited. C Limited is one that I'm very bullish on. It's a tier 1 stock for me, so I really want to take a look at. HUYA did in Judo report earnings. The stock price, I was looking at it kind of real quick before opening up the stream, just to see how things were going. And not much price movement, it seems. I have to take a look, but their report did come out. So I'm going to also try to take a look at that some point today in Judo. So HUYA, I mean, this one's just been such a volatile stock right now. That I don't really, even though it's a nice position in my portfolio, I'm just waiting it out. I feel, I think I'm still green on it though. But HUYA is one I enjoy. At these levels, I think it could go back to maybe even the high tier 2, maybe even back to a tier 1 stock for me for the year. Some great price action. I have to take a quick look at their earnings. But what else do we have? So we had Walmart, we had Home Depot. Let's see how all those stocks did. How's Walmart doing right now? The Walmart stock, that one's up 3% for the day, pre-market. So it seems. Then we have HD. Home Depot selling that lumber is up 2%. And like always, guys, feel free to post on the comments if you guys want me to take a look at any stocks. What else do we have? We have Macy's. I think that's just ticker M, right? I don't follow it too much. Macy's is up 1%. It seems like these retail, I would say, giants, in all different spaces, right? We have Walmart, we have Macy's, we have Home Depot, are up for the mark, are up at least pre-market. Stock Basic, hi Jose, did C report bad earnings? I haven't looked at it. I was listening to their report earlier today, their webcast. To me, the only part I really like to listen on the webcast are the Q&As. And I didn't hear anything too negative. We can take a quick look at the presentation and infographics for sure. So that's what I definitely want to hit on Stock Basics. But how is the stock reacting right now? So stock is down 4.5% for the day, pre-market, so it's down about 10%. We already got all the news, I think, for C, right? We already got the report. We already got the earnings call. I mean, this is crazy, right? Fat metal is dumping, right? But I mean, we literally saw these prices a few days ago, right? So let's go to 5 days. Come on, YouTube. I mean, come on, Google. I mean, 5 days ago, it was already sitting at those 200 levels, right? So it's like we're back down, but are we really back down? We literally hit those levels a few days ago. And then compare March, we hit those levels as well. So it seems like this huge right now. The only thing I can see, I'm not a technical guy, that 200 level, it seems to be a very strong support. A lot of people in the discords tend to really look at that level right now. Biz, yeah, I did. I heard the call too. Like I was mentioning, most of the call is pretty much just repeat of the press release. So the only part I really like to listen to are just the Q&A sections, because everything else is just more them reading over what they presented. But yeah, I mean 208. I'm hoping it doesn't drop too much. Maybe it can go as below 200 levels, but it does seem like there is always strong buying when it gets to that level all around. So what else do we have earnings on? I don't follow IQE. HUYA doesn't really change, didn't really show anything. But now let's take a look at Netease. Netease, for those that are not familiar, is another gaming company. They work with they've worked with Activision in creating of some World of Warcraft games. They've done a few games here and there. I think they're also working with them for the new Diablo game. That one I'm not 100% sure. Diablo Immortals. Yeah, they are Immortal. So Netease is another. I would say it's small, not small, right? Market cap of 70 billion, but it's another gaming place, and they're up 3%. So Fat Metal, the first part of earnings call is reading of the numbers with yeah. Fat Metal, right? That's pretty much the first earnings part of it. So I don't really listen to it too much. It's insane, right, Fat Metal? How could these guys not have such a good mic? It is insane. And also the people that are asking the questions. Sometimes the Q&A, I think the first Q&A was someone was, I'm like, your whole purpose is to listen to these earnings call and ask a question. You can't even have like a good mic setup. Freaking nonsense. That to me gets me a little annoyed. They should just go to Elgato or Street or Corsair and buy a nice microphone. Right, Corsair fans. Um, what else do we have? What else? Lucy, good morning, Lucy. What do you think about TPGY? We can definitely take a look at that one. Hi, Jose. Thoughts, Jabiki? Thoughts on SSD? Also, if you were going to invest in an actively managed ETF fund, would it be Berkshire B or ARK? Jabiki, all right, let me answer that question because I don't have to really look at too much. First, I'll take a look at SSD in a bit. I want to take a look at C first. But I personally would invest in, if I was only to invest in an actively managed ETF fund, I think it would be more like an ARK fund. It doesn't have to specifically be ARK, but it would be something that does innovative growth stocks, innovative technology, right? That's where I prefer my investments to go through. Again, I'm not saying Berkshire is bad. It's just not the investment styles that I would prefer for long term of things. Even though Berkshire has done amazing returns, right? I just personally enjoy that innovative technology, so I would go with that way. But I think either solution would be fine. It just depends on what style of investor you are. Fat Metal, hundreds of millions in stock-based compensation, $5 for a microphone budget. Yeah, it's insane. If it's even that much, it's probably like some of the free stuff you get when you buy the computer. Mr. Bear, good morning, good morning. That first, yes, Fizz, that guy, I'm like, at first I thought it was my microphone, not my headphones messing up when I first heard that first an analyst. Fat Metal, I invest in Tencent or Dana here. Which one's Dana here? My apologies if I butcher that one. Never heard of that one, Fat Metal. Those are the two best holdings for me. Michael, yes, don't worry. I am gonna take a look at IDX. If I promised you yesterday on the Discord channel, right? I actually had it open already, so I wouldn't forget, Bryce. So I definitely didn't forget. We can actually, we'll take a look at that in a bit. First, I want to take a look at C's investment presentation. Risk again, right? Berkshire is probably more defensive, ARK is speculative, and high risk reward. So I mean, Jabiki, why not both, right? That probably would have been my question, my answer, especially with fractional shares here in the United States and free commission. Why not both, right? Maybe I probably would put it a little bit heavier on ARK, but even my portfolio, I don't know if I sold out already of all my Berkshire, but Berkshire did have a place. Not sure if it does yet, right? Still, in my portfolio. 30, yeah. A Vanguard fund of sorts, similar to Hype Arc funds. Agree. And if you guys, there's this place called ETF DB exposure tool. And they have a free version of it. Obviously, if you pay for it, the pro version you get a little bit more. But let's say you want to have some form of um it's some form of growth stock. Let me think of one. Let's see, C Limited. So if I put C here in this stock exposure tool, it gives me all the ETFs that have C Limited, so I can kind of see, hey, what kind of ETF they're hitting, and it actually tells me how much of the percentage they have. So let's say I want an ETF with heavy exposure in C, I would look at these three, right? So we can see WUGI, Extoria Next G Economy ETF, expense ratio 0.75%, a little bit expensive. I don't know what ARC normally is. Oh, actually, ARC is actually about the same. I don't own any ARC ETFs, so I didn't really know. But we can see this one holds 7.3%. Then you can go here, and again, the website is free, ETFDB, and just put exposure tools. Then if you go to holdings, it actually shows you all the big holdings that they have. So they have C, they have Nvidia, they have TSM, they have Qualcomm, they have Myotune, AMD, Billy, Google, Marvel. So this is actually a pretty cool ETF, right? It's one I personally wouldn't mind investing in. So this is and these are category large gap growth equity. So I'm guessing these are companies with over $40 billion probably of market cap, and are all growing at certain type of levels. So I want to say, if one is ever looking for an ETF, this is such a great tool, and it's free, right? ETFDB. Just Google it, ETFDB exposure, and it'll be the first one. Okay, so Dr. Michael Rice is actually ticker IDXX. All right, we can definitely. I had the wrong one, so so we'll definitely look at that one for sure. Let me just fix the ticker so I don't forget it. All right, I was wondering. Okay, market cap of $44 billion. Let's actually take a look at this one first for Dr. Michael Rice. Um, and feel free, guys, make sure to hit that thumbs up. It helps so much with the YouTube algorithm. I really, really do appreciate the support. If there's one way to support the channel, that's definitely it. But all right, so what we're going to do first, let's take a look at this company that Mr. Dr. Michael Rice wants to take a look at. And then we want to take a look at C's earnings. Rudy Danaher or Danaher is a pretty solid on different topic. Looking at ARK Invest Funds holdings is a good way to get stock ideas that innovate and disrupt. Exactly, Rudy, right? So that's, I think, a great thing. I feel like some people just buy stocks because ARK invests in them. I think that's a bad move. I think a great move to do is use ARK as a form of stock screener, right? It doesn't mean you have to buy that stock that they bought, but they already they already brought some form of innovative company that has some form of fundamentals or to it. So hey, we can see, okay, ARK bought this one. Now let me do my own due diligence and see if I want to increase, if I want to add that position. So I do believe that ARK is a great way to use some form of stock screener. But definitely not just buy out outright because ARK bought into. And Jose, an analyst on the SE call, specifically called out ride hailing. I did see that, especially they kind of talked about the merger between the two companies. I forget those two, the two players. The two players that just merged, right? And they kind of asked about that, and they mentioned the ride hailing. I honestly didn't hear the response back from him, Fizz. So I'm probably gonna have to relook at that earnings call. I think a lot of funds are looking at Grab. Some really big funds are behind it. And yesterday was the go-to merger. I should have just read what you said, and you pretty much explained what I just mentioned. Pilot, I saw positive analysis on Nvidia. They have some advantages in their market. AMD also is doing well as a competitor. Owning both is wise as the market itself growing. You agree, but not Intel. Pilot, I do agree. I think Nvidia though is a monster especially in the GPU market, right? That's their bread and butter, the GPU market, and the exposure that GPU market entitles, right? Artificial intelligence, machine learning, blockchain technology, just self-driving cars, anything that needs some form of AI, ML. Nvidia is super strong. One thing I'm seeing in Nvidia, I haven't seen it in their most recent earnings because I don't think they've reported yet. I think it's May 24th, if I remember correctly. Nvidia normally doesn't lose share on data center GPU. So what does this tell me? If they normally don't lose market share in data center GPU from AMD, it tells me that the big boys, the big players of these data centers, believe that Nvidia is the winner in the GPU market. Unlike how we're seeing in the CPU market, right? Nvidia, AMD is constantly taking market share from Intel. So to me, that already tells me that Nvidia's technology is a little bit ahead in the GPU market when it comes to AMD. I do enjoy AMD, right? The great acquisition that they're doing with Xilinx entering the FPGA market. The FPGA market, I think, is one that's gonna grow, especially in the overall defense department. So I do like both of them. I do like AMD and Nvidia. I just think Nvidia has a bigger place in my portfolio than AMD. AMD actually has a big percentage of my portfolio. It is in my top 5 position, but that's from pure wins. That's it. And AMD was a golden goose for me. Fat Meadow, if you missed my reply, down here, thank you. I did, Fat Meadow. It's a holding for medical tech and stuff like that. Really good business and consider as a better Berkshire by some people. Okay, so I'm guessing how Tencent has a lot of like gaming, has a lot of social platforms in their holdings. I guess so. You're saying that then here is more for like medical technology type holding company. That's actually pretty interesting. That's actually pretty cool. Fizz, Tokopedia, and Gojek were the merger. As he said, they don't need to be in ride-hailing because they're already in 3 huge sectors with a lot of tailwinds. They wish go to the best in digitalized Southeast Asia. That's pretty cool. I do believe, right, they're already in 3 big sectors, right? The fintech, the e-commerce, and the gaming. I think maybe some of these. I think that third section is what really makes it, right. Like I feel like, right, Melly is in the at least in the fintech, is in the e-commerce, and I feel like it's in one more thing. It's in like others. I think everybody needs at least 3. And I think after 3 it might be a little bit too much to handle. So I think that was a great move by C. Pilot, I think you have dived deep into this stock and market. I mean, just the semiconductor industry, right? Just because of my educational background, I that's the real market. I really understand that, and I want to say gaming because of my actual gaming background, right? Those are 2 of my favorite markets: semiconductors and gaming, and sometimes they kind of go hand to hand. Um, but yeah, I think I really enjoy the semiconductor industry. Rudy, Fat Metal, you're on point with that here. I learned lean. I learned lean from one of their segments. I have to check them out, guys. That one seems like a pretty cool holdings for sure. And for instance, my entire Nvidia position is AMD wins. That's pretty cool, right? I remember you mentioned that you sold some of your AMD wins to buy Nvidia. I do think both of them have. I think both of them are very similar weight on my portfolio. One is from pure gains. The other one is just from me being pure bullish on it. Fat Metal, Rudy, yeah, I really like them. Sadly, it's a small position for me right now because they're just better bargains right now. Definitely going to add to them through long term. All right. So let's take a look at this quick. I hope Michael Rice is still here. Let's take a look. So he wanted me to take a look at Idex Laboratories. This, and hopefully, am I sharing screen? Hopefully I'm sharing screen. Yep, I'm sharing screen. Let's see. IDX is an American multinational corporation engaged in development, manufacture, and distribution of products and services for the companion animal, veterinary, livestock, and poultry, water testing, and dairy markets. All right, so I can say right off the bat, I have no pets. I usually don't. I have fish. Well, my wife has fish. So technically I have fish. But I just don't really follow the overall animal livestock market. But let's see what we can find out about it. First, let's pull out the fundamentals. So IDXX, Pilot Gaming, love gaming, gaining good too. Yeah, gaming has done amazing recently. And they're still seeing strong growth due to the Mr. Bear. I think it's a go-to personally. What are we talking about, Mr. Bear? All right, but let's see. Let's take a look at IDXX. Current market cap of $44.7 billion. Guys, excuse me, I need to go get a drink of water. Be right back. All right, sorry. I need to get exciting hold music. Sorry about that, guys. All right, so IDXX market cap of $44.7 billion, right? So it's a nice market cap company. Let's take a look at future growth. This company is expected to grow 8.8%. Right, so first thing I'm seeing, it's not a high growth stock, not a slow growth stock. Normally when I see this, there's a few things we're gonna see. They're already profitable, which they are. They're and been profitable for a long time. They have positive in cash flow from operations. Again, they do, and they have done it for a great time. So fundamentally, I can tell this is a already developed company, but growing at some great levels, right? For sure. Let's take a quick look at financial health. Financially, they are a bit leveraged, right? They have about $900 million in debt and about $351 million in cash. So they are about 1 to 3 leverage, or 3 times leverage, 3 times more debt than cash. Normally, I wouldn't like this, but when the company's fundamentals, if what we saw right there, they were profitable, they were positive in cash flow from operations. Those two, I could kind of overlook that balance sheet, right? So that balance sheet is not the best, but because of how fundamentally they are with the cash flow, with the earnings, I can kind of overlook it. I would have wished they did have a better balance sheet. Let me just take a quick look at their ownership. I just want to see, it's pretty much just institutions that own it. So fundamentally, it's okay. Not the best, definitely not the worst. I would give it probably maybe like a C plus, B minus on it, Mr. Rice. Let's take a quick look at overall. And again, I don't really know the actual market that it's in. I don't follow that market. So right now we're just looking at fundamentals and technicals. Then I think you should definitely look at the overall market itself and see how things are doing. So the first thing I'm seeing is this one has done amazing, right? It doesn't even know what a growth stock correction is. Definitely not. But that's because it's not a growth stock. It is profitable. It is positive in cash flow from operations. That's what you want to have when you have talks about higher interest rates, right? Companies that are making money now. So that's why I'm guessing it hasn't been much of a correction. First thing I'm seeing is it's not overextended from its short-term moving averages, a bit overextended from its longer moving averages. So if I ever was to enter this position, the fundamentals I liked. I don't know much about the market, so that's something we would have to look at later on. But if I wanted to enter based on if I liked everything, at these levels is when I would open up with not a super small position. When it's overextended is when I do super small positions. Right now it's like a small position, medium position, and large positions. That's how I normally like to play things. So Mr. Rice, I hope that helped out on it. And let's see what else we have. So let's see what I missed. Kishore, what about NVTA? All right, so we could definitely take a look at a few. Pilot, I love gaming too. That's why I understand and believe in skills. Biggest threat I see regulation because of age limiting and gambling, but it could be a long-term 10 to NEX. Agree, right, Pilot? That's definitely a great point about, because it's betting, the limitation on age, and that can definitely hit a good portion of the gaming world. So that's definitely something good to know. But I think you have to be. I don't know. I think you might have to be 18 to play skills games already, right? Or to do any form of competition. But I guess, is it a competition or is it betting? I mean, there's so many esports tournaments out there that you have to enter through, and people of all ages play, right? I mean, it's pretty much just like trading card games, right? You go to a comic book store, you can enter to play in the trading. Is a competition fee different from a gambling fee? I would think so. I actually would think so. um Kishore, what about NBTA? We can take a look at that one in a bit. I like it. He needs exciting music. I love gaming. Already pulling that our song said he wants XX game for his birthday. My wife, he's just turning 2. You're the one. You're the one that wants the game, Bryce. And thoughts on guys. All right, let's see. Thank you for your evaluation. Appreciate it. Biz, want to look at it? I actually just did. When is their lockout expiration? I actually just did a video on Airbnb this past weekend. On Airbnb. But first, let's take a look at C, right? This is what I'm really here for. Not to talk to you guys. Just kidding. Just to talk to you guys. But first, let's take a look at first quarter 2021 results for C. Is anybody here in C? And then let's see. So first thing we're seeing, first quarter robust revenue growth, right? Revenue grew 147% compared to the same time last year. It is seeing continuing growth compared to a quarter ago. One thing I guess investors are really looking at is if we take a look at the growth right here, it was kind of a high slope, but now when you're getting closer, the slope kind of is turning more of a S, right? It's turning more into the S. So what's going on, Electric? Yeah, me too, Fizz. I have a small position. If we take a look at, so this is digital entertainment. All right. First, let me pull back. Let me really see what I'm looking at. Huge growth in total revenue, right? We're seeing, I want to say you're seeing the biggest growth in EC. EC is their e-commerce department, right? 922 million compared to 262 million. So huge growth in the e-commerce gap revenue. Then you have their digital entertainment. Their digital entertainment also makes a good portion. This is pretty cool, right? I don't remember if we saw this last quarter, but now, or last year, digital entertainment made most of the revenue. Now e-commerce makes most of the revenue, right? This is a huge change in the company, even though I'm guessing we're still going to see that the cash flow is actually coming from digital entertainment. Still, even though they are in the fintech service, this is their DFS, which is the small portion. It is a very small portion of the overall revenue, but it is growing compared to the same time last year, right? That's almost a 500% growth on there. So that's actually pretty cool on the fintech service. Overall, digital entertainment. For those that don't know, digital entertainment or gaming companies, they like to look at bookings instead of actual revenue. Bookings is, if you look at any kind of gaming companies, they always use quarterly bookings opposed to quarterly revenue gains, right? Because it's different, and they kind of mention it in their sub notes what actual bookings means. But we can see bookings is a bit slowing down. One thing I am happy to see though is right now the market, things are opening back up, right? The overall states, especially here in the United States, I actually don't know how it's going on around the world, but here in the United States, things are opening back up. So I would have expected, as things are opening back up, for this to actually slow down, because this is the digital entertainment, but it's still growing even compared to a quarter ago. So that's the first thing I am liking. Let's see, actively users up quarter to quarter, up and up year to year. Quarterly paying users, same thing. So nonstop growth. So Fat Metal bookings. All right, so bookings are, let's say you pre-order a game. Let's see. So let's take a quick look at bookings versus revenue. I don't want to make false give you fake answers, but I think bookings, let's say a new game comes out and you pre-order that game on that day, that counts as bookings. And let's see, In SaaS world, bookings is a commitment customers pay for. Let's see, bookings in games. That's actually a good question. Bookings in game companies. Maybe here we go. Let's take a quick look. So when a customer commits to spend money with your company, that is booking. A booking is often tied to some form of contract between your company and the customer. The contract can be simple or very complicated. So I'm guessing for video game companies, when you reserve a game, that's considered bookings already, because you're kind of making that contract with the company that you are gonna buy that game, right? So even though I guess the full booking, the full revenue hasn't come out, you are already making a contract with them to buy that game. That's what I'm kind of reading. I know if you take a look at Activision or EA Games, they really explain what bookings means. But here, when a customer commits to spend money with your company, that is booking. So I guess it works with the reservation of games. But I definitely would recommend taking a quick look. I know there's two major difference between them. Maybe here we can see. Let's see. All right. But besides that, let's continue there. So we saw quarterly active users grew. Digital quarterly paying users also grew in the digital entertainment. Now, if we take a look at e-commerce, gross orders are increasing. Gross market value. Again, what we're seeing is that slowdown, right? The S is becoming more of a S curve. It's kind of flattening down. I think this is what was expected while things were reopening. I would say there is the expectation. Okay, Fizz, yes, I do believe it is. It's future revenues, isn't it? Like pre-ordering a skin. Yes, very true. So even though you haven't, so let's take a look at Hearthstone, right? Hearthstone, they release a lot of gaming packs. Sometimes you can pre-order those gaming packs, and I pay already like the $60 for the gaming pack, even though the product hasn't really been given to me, but I already pay them for it. So booking is future revenues. It's kind of like I want to say kind of like a deferred revenue to some extent, right? So GMV, gross market value, is also up. Digital find service. This is, even though they are in the fintech service, this is actually a service I don't really follow too much, just because it's not a huge player right now. But total payment volume in Q1 is up over 200% compared to the same time last year. And quarterly paying users for mobile wallets in Q1 is up over 145 compared to same time last year. Ed, this is an operating metric. It's used as an approximation of cash spent by our users in the applicable period that is attributed on our digital entertainment segments. So Ed, yes, very okay. So it's pretty much right. The cash came in from the company for that revenue. Right, they paid already for it. It's just they haven't delivered it at the moment. Footprint note from C. Thank you, Ed. Total gross profit. This is what I did expect was gonna happen this quarter. A huge growth in total gross profit. I'm gonna guess a huge portion is coming from, you can see the DE digital entertainment adjusted EBITDA. That pretty much makes this company profitable right now, right? It's just that digital entertainment. And we've been looking at Annie Mac. I think it was called Annie App. Annie App. If we take a look here, let's take a look at how do we look at top games? I forget where we go. Top apps. Here we go. So top apps, if we go to, let's go to Google Play. Top grossing overall right now is Garena, right? Garena is owned by Free Fire, which is owned by C. This is the top grossing game today. If we take a look at games, it's the top grossing app overall on Google Play right now is Garena. The second, if we take a look at it in games, is still that, right? That is insane. The overall highest grossing app right now on Google Play in the United States is Garena. Roblox is right there, right? We have Google One, HBO, right? Twitch, Pandora. HBO is doing pretty good, it seems. But that showed me that, hey, they were gonna have a pretty strong adjusted EBITDA, and that's what we did see, right? Look at that number, $717 million there. What else are we seeing? One thing, cost of revenue is increasing. That's one thing they did mention on their earnings call. Sales and marketing expense was a huge reason for that. Oh, we can see overall strong growth. Cost of revenue expenses have increased a lot. Net loss right now, the company is still not profitable. If we take a look at GAAP earnings, net loss excluding share-based compensation is still at a loss. So that's something investors are worried about. And their cash and cash equivalents position right now is pretty strong, right? $5.7 billion. The other thing I wanted to take a look at was the infographics. They usually share some great information here. So see, total gross profit up. We kind of looked at that. Total adjusted EBITDA, they are profitable if we take a look at that. Net bookings up. Free Fire, highest grossing mobile game in Latin America, Southeast Asia, and India for Q1, maintaining this leading position for the past 7 consecutive quarters. And we're seeing it grow here in United States. GAAP revenue, all right. So overall, I mean, nothing crazy about C right now. I'm gonna take a read at this later. I want to see if anything new came out for the company. But that's gonna be on later during a video. I can't really look at all that right now. But is the market open already? It is. It's 9:37. Wow, you guys should have told me something. Let's see. So C is down, right? It's down 205. If it does, I don't want to jinx it. I don't want to jinx it. Fat metal, #1 grossing in the United States. Yes, that's for just today, right? It might change throughout the day. Maybe right now all the kids are just playing as they're waking up and buying skins from their parents' Google store. But we have been seeing it lately. I kind of watch it on a weekly basis, and it's always on the top 10. So that's pretty cool. So Leo, HUYA, results not impressive as predicted. Let's take a quick look at HUYA. It's stock down. Yeah, I saw it down. HUYA, let's see. Let me close this up. Man, my microphone is on my way. Let me close this up too. ETF, we don't need that. We don't need you. We don't need you. I think we might need everything else. I don't need you. All right. So HUYA, first quarter revenue growth of 8% compared to the same time last year. One thing we have to remember though, same time last year in China, this is when the huge closure was already happening, right? They were already affected. So they already saw a strong revenue growth in the first quarter of 2021. So seeing an 8% growth right now, I wouldn't say it's the worst thing. I definitely think maybe investors were expecting a lot more than that. But like I said, same time last year, they were already in closure. So HUYA was already seeing strong revenue growth. Right, let me take a quick look at HUYA's Q1 2020. Let's see if they have another company's webcast news release. Let's go to news release. Let's go to 2020. Go about 50 per page. I just want to see how their first quarter. See, so first quarter of last year for HUYA saw 47% increase in revenue. That's because it was already being affected by the overall pandemic. So they already saw a huge growth last year. So for them to see 8%, I can see why investors aren't excited. But overall, I'm actually impressed that they didn't see a decline in revenue. They have even, again, not much growth in average mobile monthly active users, but still greater than same time last year, which again, is pretty impressive to some extent, right? Obviously, we would have expected stronger growth. I think that's what investors, but me personally, I'm happy with the results. No change positions right now on HUYA either. So let's see, let me take a quick look at the market. What's happening here? How are stocks doing? I know some of you guys are talking about Square. Damn it, man. This microphone I have, I gotta move it. It's really blocking my view. Oops. Trading view. Let's go to charts. So right now, what are things? All right, so I'm actually not on the red today, it seems. I have a lot of green. OSS, it's doing a nice turnaround story. It's back to $6. We have scales up. Things are pretty much up. Only thing I'm down right now is C. I'm down 6%. Celsius is down a bit, but that one's been doing great. Tesla is down a bit, but Unity is still down. But nothing pretty crazy. I'm gonna guess my portfolio is green for now, but we all know how that changes. That's gonna probably change by the end of the day. Speaking of Square, RIP title, and including higher quality audio with base price. What's going on with that, Ed? I haven't really looked at, I don't really look at Apple too much. So any updates, Kishore, any updates on Square? Let's take a quick look. I don't think has there been any fundamental changes to Square? I don't think so, right? This is another one sitting at 200, might be pretty impressive to get into. Let's take a look. Is there any Square stock news recently? Kishmore, let's see. This is why Square dropped on Monday. The stock market was having generally blah blah blah. However, was a major on the down 5%. So what? The primary reason: 2 billion senior notes, aka debt, in the private placement to institutional investors. I mean, I wouldn't. I could care less. If this company built up senior notes, let's take a quick look at their. Let's take a look. Future growth, right? This company is profitable. They are positive in cash flow from operations. They're expected to grow 12.9%. Financially, let's see. So right now, financially, they have $4 billion in cash and $3.7 billion in debt. So now with this $2 billion in offering, you would expect this to be about $5.7 billion in debt compared to $4 billion in cash. Now you're starting to get a bit leverage, right? So it is a bit leverage, but all right, so I can see why. Fundamentally, the company is profitable to some extent. They are positive in cash flow from operations. I'm not gonna lie. I wish they wouldn't have done it. Doesn't really change much of it because they are profitable and positive cash flow. I just don't like seeing a company being leveraged. That's the last thing I like to see. But I'm gonna guess that they're gonna go with some form of acquisition again later on. That's again, that the offering, not something I personally would worry about. Regards, the company is still doing great in an opening and a closed state. But and did they talk about the senior notes? Let's take a look at when that senior note. So let's see, Square investors relations. Let's see when those senior notes are due. Okay, I just want to go to your investors relations website. They would have announced it. So they announced a $2 billion note. Did they give us a date? The maturity dates, the interest rates, redemption provision, maturity date, and other terms of each series of notes will be determined by negotiations. Right, so there's still no actual dates to it. If this is, let's say, due in 2030, right? I mean, we saw Apple just did some form of senior notes earlier this year or later last year where they were due to like 2054 or something like this. If some of these senior notes are due more than 5 years from now, I would probably not even blink an eye, right? Because 5 years, $2 billion, I want to say that's going to be low interest with free money at hand. But still, definitely something to keep an eye on. What I'm really going to be interested on is when that debt is due. But overall, no changes to my position in Square because of that. I'm going to continue to hold, and I actually wouldn't mind adding from time to time. So let's see. In regards to Square, just dipping, and that's true, right, Mr. Bear? I totally forgot that Square has a nice first Square, right? Cash App. We looked at it, right? Cash App is seeing huge. They kind of do Bitcoin, right? They do the Bitcoin. I think that's the only cryptocurrency in Cash App, and the fees from there. So people are worried that, hey, now that cryptocurrency might not be as cool, or Bitcoin might not be as cool as it once was, maybe they might take a hit in some of that gross profit that they're getting from Cash App, right? And that was a good portion of the gross profit this most recent quarter. I think that was a little bit more than half of the gross profit came from their Cash App application. So that's definitely something that might be worrying some investors that, hey, if Bitcoin becomes a little bit less popular, if it slows down, what would maybe there might be a slowdown in gross profits for the company. Let's see, is anything trending right now? Team, that's crazy. I gotta see. I haven't really seen the merger, but wouldn't it's down 7%. That's actually pretty intense on AT&T, based on the merger. But I haven't really looked at it too much. Baidu is down about 1%. Macy's is pretty much flat. Tesla is down 1%. I mean, StockTwits is too funny with the overall. Fat Metal, why? I haven't really looked at it. Why are you not surprised? Who's buying who, by the way? Is Discovery buying AT&T? Are they only buying certain portions? I have to really look at it, but Fat Metal, if you know, I would definitely enjoy the extra eyes and knowledge at the moment. All right, so that's enough with StockTwits. Let's see, what are stocks making the biggest move? Fisker, EGM. Berkshire took a 943 Aeon. All right, nothing crazy. Oh, this was actually pretty cool. Rudy, neat. Ooh, oh, I haven't even done the episode on that one. Rudy, I have to take a look at. But let's take a look at neat. Ooh, stock. I'm still holding. No position change. I have to really look at their earnings, Rudy. So, let's see if it's actually been updated here on Simply Wall Street. I doubt it, but let's see. No, it hasn't been updated yet. So AT&T mergers their Warner Media business with Discovery. The new company will have $54 million in debt from the start. That's a nice amount of debt. So Kishore, what would you recommend? PayPal versus Square? I've actually done a few videos of PayPal versus Square. If you're here in the United States, if you have fractional trade and if you have no fees, I enjoy both. In form of growth, and they're both. I want to say they're both for different markets, for different investors. I feel like if you're okay with a lot of volatility, but a higher risk to reward ratio, Square would probably be my pick. If I want something that's growing still at decent levels, that's still in a great market and still kind of developing new products, to some extent, PayPal would be it, right? I'd say PayPal has less volatility than Square, but the overall risk to reward tolerance, I think Square might win there. So it all depends on what type of investor you are, Kishore. Damn, ATER is up 16%. I'm not sure who ATER is. Oh, this is Mohawk, right? Is this Mohawk? I forget. So guys, remember, make sure to hit that thumbs up while you're here, and let me know what stocks you guys want me to take a quick look at. That's the carpet company, Fizz. Let's see, ATER. That's up. That's crazy, right? Is that the carpet company, Fizz? ATER, Mohawk. Darian. Yep. It's up 15%. I mean, it's just been a crazy market. Again, guys, if you guys want me to take a look at anything, feel free to post. I want to see if overall I'm still green. It looks like I'm still green. C is still kind of sitting there. It's just chilling. It doesn't know what to do. I wouldn't be surprised if it goes up to 2 above this moving average by the end of the day. You know, this isn't crazy. I have not seen that Teladoc has dropped this much, right? T-Doc is down to $136. This one is ridiculous. Has anybody been adding at these levels? And this is after earnings, it seems. I guess investors didn't like earnings. I saw one of a Twitter investor I follow. He's been very, very bullish in Teladoc, and he actually just closed out his position. Um, he just closed out his position recently. And like I said, he was one of, I forget his name. Man, I forget his freaking name. But he was one of the big bulls of Teladoc. Right now it's looking like it's settling down. I'll buy Fizz. I'll buy Teladoc if it's under 100. If it gets there. Oh wow, Fizz, that's a crazy, crazy price. Business is only getting better. Literally nothing is getting worse for Fat Metal. Fat Metal, you like Teladoc a lot. I like T-Doc Head. Not gonna lie, I'm nervous. Yeah, I do have a position in Teladoc again. Two. I haven't. I guess it hasn't really affected me too much. It is a small position, but I have to take a look. Were earnings really that bad? Theus. Kathy has been buying a lot of Teladoc lately. Nice, nice. I mean, it does seem like it's cooling down at where it's at right now. They are not a COVID stock. Over 60% of their business is non-infectious disease. Fat Metal, that's actually pretty impressive to know. That's a good knowledge. That's knowledge right there. Fat Metal drops knowledge. Fat Metal drops some Fat Metal knowledge. Everything Kathy's touching lately has been dead AF. Hopefully they come back to life, right? Hey, she actually has been selling out of Nvidia. How has Nvidia been doing? Biz, Kathy has been buying coin, which I don't like as an ARC holder. Very, very interesting. And they are further expanding. I did see that the mental health care is one they're really growing, and that's due to that. Thanks to their recent. No, that's not to their in a recent acquisition, right? Um, but Nvidia, man, Nvidia is killing it. I'm really excited. Let's see some of these big players real quick. Facebook, okay. I'm trying to find something attractive. Any big players that are attractive right now? Amazon might be looking attractive. How about Google? Google's been ripping. It's insane how Google has been doing. Google has been a beast, a real beast for sure. What else in the gaming world? Let's see ATVI. Oh, guys, and one thing I actually did do. I mean, I have ETFs right here on my watch list. These are some pretty cool ETFs. I mean, sometimes maybe one thing I want to start doing is I put different ETFs hitting different markets, and I'm just tracking them to see, hey, maybe it might be time to buy a little bit of these. So I have, for example, some energy. And I definitely recommend this, especially if they're sector specific. It can kind of show how the overall market is doing. Right now, this is clean energy. Clean energy has definitely taken a hit recently. But we can see right now there's plenty of volume right here. So I'm just keeping an eye and seeing, hey, might be turnaround story for some of these clean energies. Maybe right in the robotics. And again, stuff like this, if you are bullish in robotics and artificial intelligence, by looking at some ETFs, you can find some great companies, right? Just look at their holdings and be like, okay, maybe I should do my due diligence on these companies and see if they might be worth adding to my portfolio, right? I have like bet and iGaming, I have actual gaming, I have internet giants, I have all types of subs in the streaming services. I have TAN, which is solar ETFs. I have cloud and computing ETFs. So these are some pretty cool ETFs out there. IPO on a nice run before merger vote. I don't get why a merger vote would really drive the stock price, right? I mean, SoFi, I think is gonna. It's crazy how it already has the SoFi picture. Same with PaySafe. But PaySafe is already it seems to be PaySafe has already merged, right? So this seems to be more of a fintech-ish fintech growth. Let's see. Square did not hear that. PayPal. PayPal didn't either. Maybe 4. 4 is up 3.4%. It seems like something's happening in the fintech world right now. What's another fintech stock? I can't think of any more. Lightspeed. Is Lightspeed one? Yeah, so it seems like the overall fintech or point of sale companies are up to some extent. Alibaba is big and attractive. You know, I don't know why. I just don't follow Baba too much, Fat Metal. I guess I just am too Chinese exposed right now with HUYA, with JD. I forget what other players I have in China. Niu, right? Those are some few that I have. So for that reason, I don't follow Baba too much. Daniel, let's see, FISV. That one didn't get the memo. Pfizer. The company, that one didn't get the overall fintech memo that the other ones did, Danielle. A fund I followed sold their Amazon holding this quarter. They bought in 2014 and had a 10 bagger. Most of their exposure is in Asia now. That's pretty cool. I mean, and that's pretty, I think that's smart, right? I think it's good to look at different funds and see how they're doing, right? It doesn't mean you have to follow them to some extent. You don't have to follow every purchase. But it's good to just see what other investors do, and it might give you some ideas or might trigger some form of thought for you to invest in the future. Finally, Thea's ride. That's Fisker. No, that's Nordstrom. Up 7%. But we can see, right, it's definitely been beaten down. It's crazy how some of these SPACs are doing right now. How is FRX? Holding that bag strong. Theus, was it a big position or was it just a small position? FRX is one of the few SPACs I really do like right now. Thoughts on Silvergate, Rudy? SI, I'm not personally too much into it. I know ARK, Rudy purchases a lot of it. I don't really know exactly what they do. Are they like they do fintech for mainly crypto fintechs? I don't really know what they do, but let's take a quick look at their fundamentals. So SI. Silvergate. I mean, it didn't want to come out. Silvergate. Capital. Yes, got 300 shares, which is a big position for me. Bought 18 and 15. So those are not too crazy, right? I mean, Theus, I thought I wouldn't consider you a huge back holder. Did you buy because of, were you looking for a quick trade, or are you looking for more long-term investment? Fat Metal, take care. Have a good day. Enjoy. So let me take a quick look at Silvergate real quick. Future growth, right? This company is expected to grow dramatically, 29.5% on average, right, Rudy? So a hyper growth stock. The company is profitable. I guess they are in the fintech, so cash flow from operations is not the best metric. But we can take a look at earnings. They are positive. And let's see. Nice, Diaz. All your positions are long positions. That's a great move. If we take a look at financial health, the company is super positive in cash and short-term investment. They're almost debt-free, right? They're nowhere near leverage. So fundamentally, Rudy, great. It's definitely a great company fundamentally. I don't know exactly, Rudy, what the market is doing. So that's a whole different story. And the stock price has definitely pulled back a nice amount. Let's take a look at SI here. Silvergate Capital, right? I mean, it's sitting at nice. It's not overextended. It's sitting at a great volume area right now. So this is a portion. If I was bullish in their market, if I was bullish in their fundamentals, this would be a point where I would buy with at least bigger than a smaller position, maybe somewhere of a medium-sized position, and just add up over time. All right, guys. So let me take a look at the last one for you, Shishu. And that's gonna be PD. I'm guessing that's PagerDuty, I think. PD, yeah, PD. So future growth. This company right now, market cap of PagerDuty is about $3 billion. Future growth. Company is expected to grow 17.9% on average for the next 3 to 5 years. This company is not profitable, but they are positive in cash flow from operations. So not a complete speculative play because they are positive in cash flow from operations. So that's great news. I still want their financial health to be strong. Financially, they have about $217 million in debt and about $560 million in cash. it's almost a 2-to-1. I wish their balance sheet was a little bit stronger because they're not profitable right now. So I wish it was. I wish they had a little bit less debt, but fundamentally they look okay, right? At the end of the day, none of this is advice, as I am not a professional. But fundamentally, and again, I don't understand what the market they're hitting is in. Fundamentally, they don't look half bad. I really would wish that they had a better balance sheet. If we take a look overall, same thing. Pretty much all growth stocks are kind of seeing this, right? Down crazy levels. So now is the point where it's looking a lot more attractive than it was here. So that's it for today's episode, guys. I hope you guys enjoy. Take care, have a good day, and see you tomorrow. So peace out, guys. Oops, I have to go to my stream. Ooh, let me do this.